statement. It's a one of statement, position state, one of the financial statement prepared by business and submitted at the end of specific period. At the end of specific period. Here, we presented there are three elements. They are assets, equity, and liabilities. The statement prepared by business at the end of the specific period. End of the specific period mean considering a period or specific period. At the last day is mean at the end of the specific period. In this date shows the position of assets, liabilities, and equity of the business. Assets, liability, and equity of the business. This relationship is discussed in earlier in at grade 10. In grade 10, discuss about that the assets is equal to equity and liability. That means all the business assets are contributed by owner and external parties. Therefore, this relationship based on in financial position statement. Therefore, the statement include there are three elements. There are assets, liabilities, and equity. First thing we are going to discuss about the what is asset. Asset are the resources. Assets are the resources under the business control. Under the business control mean the business resources are registered in name of business or invoiced in name of business. The registered in name of business mean the example the land and building and motor vehicle purchased then registered in business. In case of machinery and furniture and office equipment, not cannot be registered in business name. Therefore, it is invoiced in name of the business. That is called under the business control. That arose, that assets arose as a result of past transaction. Past transaction mean the transaction that create these elements. That's a one of element is assets. The past transaction already conducted exchange of resource by business with various parties. Example, owner introduced capital rupees 500,000 in the business. After that transaction, business receive has as asset as 500,000. And the bought furniture from Dempro, costing over rupees 200,000. After this transaction, after this exchange of resource, business received under the control that value of assets. There is a 200,000 value of furniture. They are arose as a result of past transaction. From these assets, business expect future economic benefits. Business expects future economic benefits. Future economic benefits means in future business can earn something using this assets. Example, the land and building are used for administrating the business activities. Machinery are used for producing goods or services. And investment are used for return of income. Stock are used for sold. So stock are used for selling goods and earn something. The has are used for purchase anything. Therefore, these all these assets will return future economic benefits. Therefore, it is considered as asset. That's the asset. Therefore, assets mean the resources under the business control that arose as a result of past transaction from which business expect future economic benefits are termed as assets. Example, land and building. This is one of asset under the business control, registered in name of business that arose as a result of past transaction. Only or the sometime it was introduced by owner as capital or the purchased this land and building from anywhere. Then expected future economic benefits where business can conduct all the business activities in this land and building. No need to pay the rent. They can conduct their business activities in the own building. Therefore, it returns some economic benefits. As it is machinery, investment, stock, as they are under the business control, and arose as a sort of past transaction and expected future economic benefits. Next thing, characteristics of assets. characteristics of assets. Characteristics of assets means the first thing, the resources or assets arose as a result of past transaction. It is we have discussed in definition. The there are definition is combined using these three characteristics. First thing arose as a result of past transaction. That's a one of character. The assets or under the the assets under the business control that created by conducting any transaction. Example, owner introduced capital or purchases of furniture or machinery or anything. Therefore, by credit sale of goods to customers, as also so on, these transaction, these assets are conducted through this transaction. Then second character is the under the business control. Under the business control mean the business is registered in name of business or invoiced in name of business. Third thing, expected future economic benefit. The business expects future economic benefits from this usage of assets. These are the characteristics of assets. Third thing, type of assets. These resources under the business control, that are assets, are categorized into two categories. They are non-current assets and current assets. Non-current assets and current assets. Non-current assets means the resources expected to be used more than 1 year is called non-current asset. The non-current asset means the current or non-current is categorized based on a time, the timeline. Timeline means the 1 year is considered as a time criteria. According to the based on this time, within one more than the assets that can be expected to be used more than 1 year, that is called current assets. Non-current assets, they are land and building, machinery, motor vehicle, office equipments, long-term maturity investments. They are considered or categorized under the non-current assets. Then second thing, current assets. Current assets means the current assets means the assets that are expected to be sold. That are expected to be sold. The current assets mean the assets that are expected to be sold. Example, the inventory. The inventories are retained in business to be sold in future. Therefore, that is one of assets, but it remain within short period of time. Next day, or next day or next week or next month, within 1 year, it can be expected to be sold. Therefore, that is current asset, inventory. Converted into has. Example, trade debts. Trade debts is one of current assets because of business expects to settle their debts within short period of time by customers. Therefore, this is also considered as current asset. Then, and use within 1 year. Used means the has in hand. Has in hand that are expected to spend the money. Expected remain as has to spend it. Therefore, used within 1 year. Therefore, the current assets mean the assets that are expected to be sold or converted into has and used within 1 year. 1 year, within the 1 year period, we can sold or converted into has or used. But sold mean the expected to be sold within 1 year is called inventory. Inventory is one of assets. They are called current assets because of it is expected to be sold speedily within short period of time. Therefore, it is considered as or categorized under the current assets. The rate debtor arise by credit sales. The rate debtor arise by credit sales. It is expected to be settled by customer very speedily within short period of time. Therefore, this is also considered as current assets. And has in hand means the has in Hasier's control. The has in Hasier control or Hasier has books. That is also considered as current assets because of it can be used any time to conduct any transaction. Therefore, these type of assets are called current assets. The type of assets, repeatedly, type of assets is classified or categorized under the non-current asset or current assets. Non-current assets mean the assets that are expected to be used more than 1 year is called non-current assets. They are but tangible. Non-current assets are land and building, motor vehicle, machinery, office equipments, and in investment also considered as non-current assets. Under the current assets mean the assets that are expected to be sold or converted into cash and used within the 1 year period. The example: inventory, trade debtors, cash in hand, cash at bank, cash in petty cashier. They are called current assets. You are given some examples for non-current assets. You are given examples for some non-current assets. They are land and building, the land and building, machinery, motor vehicle, furniture, office equipment. These are called tangible non-current assets. These are called tangible non-current assets. It has physical appearance, and tangible thing. These are expected to be used more than 1 year. It is created or purchased or constructed to be used for than 1 year purpose. Sometime it may suddenly sold out, but the purpose of buying purpose is to be used more than 1 year. Therefore, it is considered as non-current assets. Then investments, they are fixed deposit, shares investment, other investments that are considered more than 1 year maturity. More than fixed deposit, sometimes we can deposit for 3 months or 6 months. Even though more than 1 year, 2 years, 5 years deposits are called non-current assets. Share investment also same thing. In other investment also, if it has money more than 1 year maturity, that is considered under the non-current assets. Next thing, current assets. The current assets mean already discussed about this. Current assets means the assets that are expected to be sold, that is inventory or stock. Inventory or stock means the retained goods for resale at the end of specific period. Retain goods for resale at the end of specific period. Next accounting period, it should be sold out very speedily. We are expected to sold out very speedily. Therefore, that is called inventory. They are considered under the current assets. Trade debtors, second thing, trade debtors or trade receivable. Trade debtors or trade receivable mean that a receivable value from debtors by net credit sales. By net credit sales, the amount receivable from debtor or customer is called value of debtors. This is also one of current assets because of business expected to receivable that much of amount within specific period. Therefore, that is also current assets. Third thing, receivable income. Example, receivable rent, receivable commission, receivable fixed deposit interest. They all are called an receivable income. Receivable income means earned income but not received as cash until end of specific period. The receivable income means the specific earned income but not received as cash at the end of until end of specific period. In this receivable sometime received in next period. Until that time, it is considered as asset of business. That is called current assets. Treasury bills. Treasury bills are the instruments published by central bank and issued through commercial bank to public by collecting funds that are needed to government as an investment plan. We purchase this treasury bill when they issue at discounted price. Then at the maturity date, we will provide them that we submitted and collect face value of that amount. That is called treasury bills. This is also investment, one of investment This is short period investment, 3 months or 6 months. Therefore, it is considered under the current asset. Next thing, fixed deposit, less than 1 year maturity. This is also one of assets. More than 1 year maturity, that is considered as non-current assets. The fixed deposit less than 1 year maturity, that is considered current assets. With the purpose of obtain interest income. This investment is made for the purpose of obtaining income. Therefore, that is considered as current asset. Next thing, other short-term investment. Other short-term investment. This is also one of assets. This is also one of investment made with the purpose of return income. Then asset bank. Asset bank means balance in our current account, and has in hand, petty cash in hand. They are remain money, remain has at the has box, so hand has a hand. They are called current assets that are expected to be sold or converted into has or used within 1 year. How to present the assets in the financial position statement. Our main topic is presentation of financial position statement. In the financial position statement, the assets, liabilities, and equities are presented. Then presented in the equation of assets is equal to equity plus liability. In this series, how to prepare or how to present the assets in financial position statement. The business assets are listed in top of the financial position statement. In the statement, top of the statement, these assets are listed down under the two headings. They are non-current assets and current assets. Non-current assets and current assets. Under these headings, the assets are listed down according to the liquidity order. Liquidity order. This is a presentation of assets in financial position statement. Repeatedly, I say that the business assets are listed in top of the financial position statement under the headings of, there are two headings under the headings of non-current assets and current assets. Earlier discussed about these non-current and current assets. Under these headings, we list these assets in liquidity order. Liquidity order. What do you mean by liquidity order? Liquidity means assets that can be changed into has within the short period of time without any losses. Very speedily converted into has. For example, the has in petty cashier, has in hand of petty cashier, has in hand of cashier, has at bank. These are 100% liquidity item. Liquidity item. 100%. Has in hand, has in hand, has at bank, has in petty has. These are 100% liquidity items. A liquidity 100% liquidity asset. It is called as cash. Therefore, it is called 100% liquidity item. Other assets, the less liquidity item means the trade receivable or trade debtors, trade debtors. That is a less liquidity compared with has in hand. That take short period of time to convert into has. Sometimes if we receive speedily, sometimes we have to provide the certain percentage of discount, certain percentage of allowed discount. Therefore, intake losses. Therefore, it is a less liquidity. As it is stock or inventory, it take more time to sell than converted into has. It is also sometimes it take some losses, any losses by by converting has within short period of time. That is called liquidity. These assets are listed in these assets are listed in financial position statement in the order of less liquidity to high liquidity from top to bottom. In the financial statement, top of statement will list down the order of less liquidity items to higher liquidity items. The example in the financial statement, you can see this statement. The assets are categorized under the two heading. They are non-current asset and current assets. Non-current assets and current assets. Here, the order is made in according to liquidity order. Top to bottom, less liquidity to high liquidity. The land and building, machinery, motor vehicle, furniture and fitting, office equipment, investment more than 1 year maturity. They are listed in top. Under the current assets, inventory is first. Inventory is first because of less liquidity compared with cash in hand. Second line, rate debtors. Third line, receivable commission or receivable rent or any receivable income. Earn income but not received has until end of that specific period. Less than 1 year maturity investment. This is also can converted into cash with certain time consumption. Then has at bank, has in hand, petty has in hand. In this order, all these assets of business at the end of specific period should be presented in financial position statement. This position at the financial position statement under the non-current assets and current assets, these are listed according to their liquidity order. First, non-current assets are total, then posted to second column. Current assets also total, then posted to second column. These two subtotals are called total asset of the business at the end of specific period. As it is, all the business assets are listed in financial position statement. You are given one of example, including some assets, non-current and current assets. You are required to list down in financial position statement according to their criteria. Criteria I mean all the assets are categorized or listed or presented in financial position statement under the two headings. They are non-current asset and current assets in liquidity order. We are going to okay. Right. Here you are given some assets, they are current assets and non-current assets in a irregular order, liquidity order. We have to arrange it in financial position statement. The financial position statement has two columns. Two columns. First, top of this statement, we have to list the assets under the two headings. They are non-current assets and current assets. Current assets. First, has in hand. Has in hand is a current assets, higher liquidity range, higher 100% liquidity assets. Therefore, it is listed in bottom of this order. Bottom of this order. But that is has in hand. Has in hand. That is 45,000. 45,000. Second thing, land and building. Land and building is a non-current asset and less liquidity order. We can put it in top of this category, land and building. Land and building. Rupees 300,000. 300,000. Debtors mean trade receivable. The debtors trade receivable is arised by conducting credit sales. That much of amount is receivable from debtors. That is the current assets listed in second line of current asset. First line is inventory. Second line is debtors. Our second line, trade debtors. Debtors, that is 18,000. 18,000. Next, furniture. Furniture is a non-current assets. Non-current assets. We can put it in non-current assets in any order, but that is preferable to order in lastly. Lastly mean in non-current, in the last line of non-current assets category. That is a furniture. Furniture. Lastly mean before investment. Before investment. Furniture. Furniture. Rupees 14,000. 14,000. Machinery. Machinery mean that's a non-current assets, less liquidity. Therefore, we can list it in under the non-current assets second line of this category. Machinery. That is 60,000. 60,000. That's a machinery. Stock. Stock is a remaining goods at the end of specific period to resale. This is also one of current assets, but first line of current assets. That is stocks. Stocks. 36,000. 36,000. Fixed deposit for 5 years. Fixed deposit for 5 years mean this maturity will be maturity period will be after 5 years. Therefore, it is considered as non-current asset. More than 1 year, it can be used as assets more than 1 year. That is considered as non-current asset. Now it is also categorized under the non-current assets. Lastly, fixed assets, fixed deposit, rupees 100,000. Next thing, motor vehicle. Motor vehicle also considered as non-current assets under the machinery. Motor vehicle. Motor vehicle. Rupees 240,000. 240,000. 240,000. Then investment. Investments also considered under the non-current assets. No, the time is not specified. Therefore, we can consider it as non-current assets. Investment. Investment. Rupees 75,000. 75,000. Fixed deposit for 6 months. 6 months mean it matured on or matured after 6 months. Therefore, it is one less than 1 year usage. Therefore, it's considered as current assets after debt. So, rate receivable. Fixed deposit. Fixed deposit. Rupees 40, 40, 40,000. 40,000. Then Hazard Bank. Hazard Bank, we can list it before has in hand. Before has in hand. Hazard Bank. That is 45,000. Yes, we have listed the assets in financial position statement. In the financial position statement, part of financial position statement, financial position statement. It's a part of financial position statement. Only assets are presented. Under the two heading, they are non-current assets and current assets. Non-current assets total is posted to second column. Uh, 9. 789,000. 789,000. Then subtotal of current assets. Subtotal of current assets. They are 184,000. Altogether, non-current asset and current assets total finally total and got total assets value. They are 13, 973,000. It is a financial talks, a part of the financial position statement only presented assets. Under the two heading, they are non-current asset and current assets according to their liquidity order. Yes. Second thing, you are given some, you are given one of exercise. You can Yes. Accounting period of Sunimal's business starts on 1st January 2020 and end of 31st December 2020. As at 31st December 2020, the following balances are extracted. Accounting period of Sunil business starts on 1st January 2022, 31st December 2020. 31st December 2020. The following balances are extracted. You are given some assets values. They are non-current and current assets. You are required to show these category of assets under the current and non-current in extract of the statement of financial position. That means the part of the financial position. Okay, we are going to draw the statement. Right. Under the two heading, you have to put the headings. They are non-current assets, non-current assets, and current assets. Current assets under the two headings. First, machinery and equipment. Machinery and equipment is a non-current asset. This assets is expected to be used more than 1 year. Therefore, it is categorized under the non-current asset. Machinery, rupees 185,000. Furniture also that same non-current assets. Furniture 25,000. 25,000. Closing stock is a current asset. It retains goods for resale very speedily. Expected to sell these goods speedily. Therefore, it is considered as current assets. First line current assets. Stocks that is 65,000. 65,000. Trade debtors. This is also one of current assets. Second line assets. Trade debtors rupees 52,000. 52,000. Has in hand. Has in hand is a last assets. Has in hand is a last assets in under the current assets. Last order. Last is the last line because of it has 100% liquidity. 100% of liquidity. Therefore, it is presented in last. Has in hand rupees 65,000. Motor vehicle 340,000. That is considered as non-current assets. Motor vehicle rupees 340,000. 340,000. Hazard bank. Hazard bank is located under the current assets before has in hand. Hazard bank. Rupees 40,000. 40,000. Income receivable 16,000. Income receivable also one of current assets under the debtors. Under the current assets next to debtors. Income receivable. financial statement. In top of the financial position statement, a non-current asset and current assets. Then total these both headings total. First thing, non-current assets value 550,000. The current assets total 238,000. Totally, total assets will be 788,000. 788,000. This is a part of the financial position statement. Here only the business assets at the end of specific period are presented. This total will be equity and liability. Equity, the regarding equity and liability, concept of equity and liability will be discussed next classes. Okay, thank you.